All right. I think we're live and ready to go. We are back. Let's talk futures. Joining us today, very special guest from over the pond, Crede Sheehy-Kelly, high performance coach. Crede, how are you?
I'm really good. Thanks, Jim. I'm happy to be back. Love our chats.
Yeah, no, it's great. It's great to have you. Everyone says this, and it's true, right? Learning the mechanics of trading, you can learn the mechanics of trading. Learning technical analysis, you can learn technical analysis. Developing strategies, you could develop strategies. But really, where the rubber meets the road is what's happening in your head. And so psychology is a big deal for me. It's been a big deal for my entire life. So that's why it's really important that you're here. I appreciate you being here.
Yeah, not at all. And it's so important in any high performance domain. And I think I meet traders who really pay it a lot of attention and they really believe in the importance of it. And then there's other traders who kind of dabble in it, but don't see how much it can actually change their trading. So I'm here on a mission to help people understand how much it can actually improve your trading and optimize things for you. So it's not just about fixing what's going wrong as well.
Yeah, and so it's funny because when I was coaching my son back in the day, I would tell him in the middle of a match, when things were getting hot and heavy, stay inside your head. Stay inside your head. And what I meant by that was focus, don't get distracted with anything, including any self-doubt. Just do what you do. And I think that idea, I think it was good advice. I don't know. I'm his dad. Maybe I'm a little biased, but I think that advice also applies to trading.
Absolutely. And it's stay inside your head, but it's also optimize what's in your head. So just even as you're talking about that, it brings me back to I used to play field hockey in school, like super competitive person. So I loved it. But I got into a rut where, I was a center forward, so I should have been scoring goals. And I got into a rut where even when I got the ball, I wouldn't expect myself to score. And of course it played out. So staying inside my head at that point wasn't useful because what was in my head wasn't serving me. So I think the idea is to optimize what's in your mind. Like you can take control of it, you can improve your mindset, and then that becomes your biggest asset. So definitely in trading, it's about staying there, but making sure that what's in your head is going to support you in executing your trading plan.
Okay, so when things start going sideways and you start having some self-doubt, that's when you want to optimize, right? That's when you have to recognize you need to optimize.
So I love that you actually bring that up because for me, and this is part of what I'm trying to educate people around, is that you actually don't wait until things are going wrong. So if you think of this in fitness terms, like if let's say you have a goal to, I don't know, put on muscle and increase your cardio fitness, you would start paying attention to lots of different things. So you'd look at your nutrition, you'd have a gym plan, it would include different exercises all aligned to achieving that goal. So your mental training for trading is the same idea. It's just part of the jigsaw puzzle. So it's not just something that you pay attention to when things start to go south. Actually, if you tackled it from the start, at least once your trading plan is in place and you know what you're trying to do, then you can actually preempt things going badly. So, you don't lose the money in the first place because of problems with your psychology. You're actually optimizing it from the outset. Just the way that like Olympic athletes would be working on their psychology, even when they're performing at their peak. It's something that they're constantly optimizing. So it really doesn't have to be that something is going wrong to start looking at this. In fact, the sooner you start looking at it and paying attention to it and working on it, the better you're going to benefit your trading.
So even with that mindset, at least for me personally, I'll still have a bad trade. I'll still have a bad trade, right? It'll still be everyone has losses. I'll have a bad trade. And so now I'm going to go back and say, was I optimizing correctly? What did I do wrong? Right. That's kind of a lessons learned after the fact.
Yeah. Yeah. So I guess when I'm talking about optimizing your mindset, I'm talking about it in the global sense so that it supports your trading. So that could be working on your goal setting, making sure that you're setting goals that hold you accountable to the execution of your plan, making sure you're not getting dragged by a P&L focus, having belief in your ability as a trader, like all of these different jigsaw puzzle pieces of the mental edge. And so when you're working on those and then you take a loss or you have a bad trade, you make a mistake, which is inevitable. So, that's not going to protect you fully from like having those bad moments. You can recover much quicker. So you can really quickly not emotionally attach to that loss or that mistake. You can just take the learning from it, just park it and move on really quickly. And so the actual impact on your trading account is minimal. Whereas if you haven't worked on your psychology and you don't have the resilience to stop your emotions from getting tied up with that loss, then the likelihood is that your actions won't serve you after that loss. So you might start revenge trading. You're trying to make up the loss. You don't want to finish the day red, so you just keep trading setups that don't fit your plan. So you can avoid all of those less than ideal actions if you have the optimal mindset from the outset.
That totally makes sense. For me, well, the other thing that totally makes sense. The other thing that I always told, we're going back to training. We're going back to being a coach, me being a coach. What I would tell my son is, uh, enjoy the competition, have fun, enjoy the competition. This isn't life threatening, right? So when I'm trading, the idea of having fun and enjoying it is a little bit trickier, right? Because there's money on the line.
Yeah, the pressure's higher, but the advice is perfect. Like that, if everyone could trade from that place of enjoyment and joy, they would be trading a lot better. It's just harder to maybe achieve that state, but it's definitely the ideal state to be looking for. So actually, this is a little not off topic, but a little side note. So one topic that I've been working on with a lot of clients recently is actually operating from a place of joy instead of a place of fear. So I found that a lot of people are making decisions based on fear of losing money, fear of missing out, fear of not being productive enough in their daily life. They think they have to be with the markets 7 days a week to be a good trader. And it's resulting in people burning out, not trading optimally. So if you actually shift your baseline operating system to operating from a place of joy, it can really revolutionize your trading and your whole life as well. It's a much bigger topic, really, it's hard to kind of explain the essence of that in a short soundbite, but it's a really important topic.
Yeah, no, for sure. I get it. I mean, you shouldn't be doing something you're miserable at. That makes you miserable, right? Or the stress level. Stress is a big deal in life, period, for everything you do, right? Oh, if you have a lot of stress while you're doing your activity, you're probably not going to perform as well. And that's why I like to look at the whole picture. It's like, hey, are you exercising? Are you eating right? Are you getting good sleep? Are you laughing a little bit? All of these things are really kind of important to fold into your activity.
Yeah, it's that whole performance lifestyle approach. So you're looking at all of the different factors that can impact your trading. And I think stress is so important for traders, particularly because there is pressure inherent in the market. Even if you're the most chilled out person in the world, there objectively is pressure when you're trading your money or you're trading someone else's money. So it's so important to keep your personal stress, at a manageable level. Ideally, you keep it at a level where there is no stress, but that's maybe not realistic. So that when you go into the market, you're not adding the inherent pressure in trading on top of that. So if you think of it like a cup overflowing, if you've already got a certain amount of personal stress and then you add the natural pressure in trading on top, that's where you boil over. So, or, the cup overflows. So part of actually being an excellent trader is really managing your personal stress as well.
Yeah, no, I agree with that. Especially as I get older, it's like, all right, you gotta be active. I mean, you've got to, I walk the dog. All right, so let's not get too crazy, but that extra, that routine, getting fresh air, walking around, getting my 10,000 steps in, that not only does that help me physically, it helps me mentally. It's like I accomplished something. I did something good for myself.
That's so true. And that is like when I'm working with people as well, and we talk about the mental edge, that does come into it. We actually have a tool to use to look at what do you do from a physical perspective that supports your trading, and exactly things like you're talking about, taking breaks, getting time outside, walking the dog. It could be going to the gym for someone. It helps your mental, like your cognitive functioning. It helps your mental and emotional well-being. It helps you perform better as a trader. But I think what a lot of people struggle with, at least that I've seen, is when people have A-type personalities and they're super ambitious, they sort of don't give enough weight to those kind of activities, thinking that they impact their performance. So they more feel like they have to be sitting in front of the computer 24/7, have a 3-hour trading review. Everything has to be hard and over the top in order to succeed. And it's actually not true. So the more strategic you can be, the less time you have to spend doing things, and the more time is freed up then for these other things that bring benefits to your trading. So it's really about working smart and not hard.
So expand on that, being more strategic. What does that mean?
So, well, one of the key areas to make that concrete where I see it with people is that those people that tend to overdo things, they feel they have to give it 150%, is especially with their daily trading reviews. So they ideally, they have a plan where they would track so many different variables, and their daily review is taking them an hour or an hour and a half. And they start out with lots of enthusiasm and they track it for 2 weeks. And then it's just too overwhelming. They're tired. They don't want to go through that process at the end of the day, and they throw it out the window. And then they beat themselves up for not doing it. Whereas actually, if they slimmed it right down, chose maybe 10 variables, the key things to just track, reduced it to like a 15-minute exercise. And they only track data that they were actually going to make decisions with or use to inform actions. So not just data for the sake of data, but actually kind of data that's meaningful to them. Then that becomes a much more efficient and effective exercise, and it's something that's easier to stick to. So it's not the hour and a half trading review doesn't actually serve you any better than the 15-minute one if the 15-minute one is optimized.
Okay, so if I could, so quality time, quality focus instead of how much time you're spending doing your analysis could be actually more beneficial.
Exactly. And the same goes for even like trading hours. So what I found is the more successful traders that I've worked with have usually traded for less hours than maybe the people who were super ambitious but hadn't quite reached that level of expertise yet. And so those people felt like they should be in front of the computer, 9 to 5 or equivalent, or 7 days a week. And that just burns you out. Whereas the traders who were more strategic had their trading window and had utter focus for that period of time and then switched off and did something else, they actually tend to be the more successful traders. So that's not scientific, but it's just in my experience.
Yeah, no, I think that's true. In my experience also. I mean, what I like to tell folks is, hey, listen, pick a time frame you want to be an expert at. Maybe it's pre-market. Maybe it's those 2 hours before the New York bell rings. Maybe it's, right when the New York bell rings. Maybe it's in the afternoon. Maybe it's in the middle of the day. Maybe it's, when the European session opens up. Pick a time, become an expert at that time, couple of markets, 2-3 hours, and then you might do better than 12 hours in front of the screen.
I would absolutely agree with that. And I have to be careful, I would never advise someone from the technical trading perspective, but from the high performance perspective, that makes total sense. Even in terms of your ability to stay really alert and focused, obviously that drops off after a certain amount of time. So if you just have let's say it's the market open and for 2 hours or whatever your window is, if you are super focused for that period of time and you absolutely maximize every action that you take, well, then you're going to get a better return rather than, dragging it out for the day. Your focus and attention is kind of declining as the day goes on, might lead to more emotion-based trading, and then you're giving back your profits. So definitely working smarter for shorter time periods is, I feel, a better approach.
Yeah. And so, me and Tom do, we our live streams are 3 hours. The first hour and a half is really, really spent on analysis and coming up with trade ideas. But we've already been up a couple hours prepping, right? So a lot of that prep has to do with that first hour and a half. After that point, a lot of times I'm like, all right, I'm done looking for trade ideas after, we've already been doing this for a few hours. I'm done. I need to reset.
Yeah. And I mean, that's true. It's just how our brains function, which is also why taking breaks is important as well. If you're talking about that from just being able to trade your own, sitting in front of your account and having the ability to get away from the computer and come back to it. Those breaks can be really important just in terms of refreshing your attention, your focus, which again is not something that everybody puts a lot of importance on or recognizes how impactful that can be for their trading.
Yeah. That's awesome. I love having you on. We haven't even gotten to the official topic yet. It's like, how much time do we have left on the clock? Let's talk about belief perseverance, because it's a concept in psychology, I believe perseverance, and I fall for it all the time, right? And this is a concept that I think a lot of traders struggle with, because you believe a certain thing is going to happen even regardless of the data in front of you.
Yeah. So we call it kind of, I'm going to put this in the category of biases because there'd be other biases as well that would impact traders. So specifically what we're talking about is a way, like a lens that you're looking at the market through, that filters out some data and that only reinforces the data that you want to see. So it's obviously a problem because you want to be just reacting to what the market's presenting to you as opposed to trying to impose yourself on the market. But yes, a lot of traders struggle with it. But in terms of trying to address that as an issue in your psychology, the first thing to understand is exactly why it's happening. So it can be happening for different reasons for different people. So it's not necessarily the same fix for every single person. So I think that's a really important place to start, is understanding the different reasons why this occurs. Hopefully that makes sense.
Yeah, no, it does. And so as an example for me, like we'll look at a stock index future as a market that we trade, and I might have this belief perseverance that by the end of the month, we're going to reach a certain level, right? Price is going to hit a certain level. Yeah, it happens. It's the stock market. It's designed to go up. It always goes up. Yeah, there's going to be some breaks in the action every once in a while. It's a wave-based kind of move, but by the time we get to the end of the month or the end of the quarter, the end of the year, whatever time frame I'm thinking about, it's yeah, no, we're going to be. I know we're going to be up there. I know we're going to be at 5,900 in the S&P, and I don't know. So I think.
Yeah, yeah, and that happens on the macro time frame, like you're talking about, end of the month, end of the year, or on the micro, like you're in a trade and you think, well, this is definitely going to
Yes.
go long, and actually, it's not. So I think it can happen on all those different levels for people, but I guess the thing to ask yourself, if this is an issue that's in your trading and you're trying to address it, it's to ask yourself, why is this happening in the first place? So we use biases because it helps us to process information quicker so we can make decisions more easily, basically. Doesn't always mean that they serve us, like in this case. But in trading, this can be happening, like this type of bias can be happening for different reasons. So if we go to the very subconscious, like the deepest subconscious level, it can be that you stick with that belief. So fair enough, you make an opinion or a kind of projection, and that's fine. But if the market is showing you that that is wrong, or it's not likely to have the outcome that you expect, then ideally you would pivot and kind of read the data and adjust accordingly. If you're holding on to that belief, sometimes it's because at the deepest level, you want to be right, which is a really common limiting program that impacts traders. Then if you take it to another level up, it could be prior experience. So let's say that this type of pattern has happened before and you had a really good month, and when you saw this pattern, you ended up making, I don't know, a good chunk of money at the end of the month. And so you're hoping to replicate that. So rather than looking at the data as the market is changing and it's telling you, no, actually, we're not going to that level, you're clinging on to the hope because it's happened before. So you're saying, well, because it happened before, it's likely to happen again. And you're letting that memory or that hope override the data in front of you. But then at the most surface level, it can also be that, and this, I'm talking about this more in terms of the micro time frame of when you're actually in a trade and you're letting that bias impact how you're trading. It can sometimes actually just be down to the very practical issue of technical expertise. So, for example, if somebody is always going long, like that's what they've practiced, that's what they're really comfortable with, and then the market's going short or the trade is going short and they're feeling under pressure, they might hold on to the belief that it's going long because their expertise supports that. They find it easier to do it. So under pressure, they're trying to revert to what comes easiest to them. So they're filtering out the data that doesn't support the idea that it's going long. And, they're clinging to that belief instead of actually reading the data and understanding that it's going the other direction. But in that case, it's just literally down to technical expertise. So it might be that if that was happening for someone, they'd be better off to start like actively practicing taking short trades over and over and over and over so that their skill set becomes equal in terms of going short or going long. And then it's actually available to them to read the data correctly and take the appropriate action.
Oh, so that's interesting. All right. So me and Tom have been exploring, and Mike Burke have been exploring this opening range breakout trade, right? And what I mean by that is, the opening range is the first 30 minutes, and we figure out where the top and the bottom prices for that first 30 minutes. And then we might say, all right, if we break above that, then I want to get long. Then I want to buy a contract. If we break below it, then we want to sell a contract. And in that breakout trade idea, oftentimes you're buying a high or selling a low, which is, you're intuitively taught, no, you want to buy the low and sell the high. And so you're doing the opposite, but you want to have faith in the analysis that breakthrough is going to continue on its way and that your entry was correct. So it's a conflict in your head immediately.
That's interesting. So if I'm understanding it correctly, for that strategy to work out, you have to be super in tune with just the market data and leaving all of your expectations and beliefs to the side and just reading the market data. Is that right?
Yeah, and you have to be comfortable with the idea of maybe getting long at the top of the daily chart, right, or the morning chart, or getting short at the bottom of the daily chart, which usually is an area where people want to do the opposite.
Yeah. So you have to overcome the emotion or the natural tendency to go one way in order to stick to the strategy. So that's a really good example of where working on the skill set of being in tune with the market and just reacting to the data in front of you will serve you. So I think that's actually a skill that a lot of people can practice as well, that maybe people don't realize that they can practice that. So on one level, you can work on overcoming the psychology challenges if there is a subconscious program where you have to be right or whatever is at the root of the psychology piece of it. But then also you can practice reacting to the market and upskilling on that as well.
Yeah, no, that's what we've been doing. I mean, past performance not indicative of future results. We've been using a real-time simulated live account. This has been one of our major strategies in the morning recently. So we're getting a lot of practice doing it. And I hate to say it, but we've been pretty good at it, right? Now, again, past performance not indicative of future results, but it's a technique that I've never really bought into until we started doing it.
That's awesome as well, because like that, you're practicing it, you're getting the data, the performance data that reinforces that this is working for you, and then you build confidence in that. So at the very start of implementing that strategy, you'd be really fighting with your natural instincts to do the opposite. But as you build up the practice and you keep seeing this performance data telling you that this is profitable and it works, that also goes a long way to mitigating that natural instinct to do the opposite.
Yeah. By the way, we have Nicholas in the chat saying mindset is key.
That's what I think. I agree, Nicholas.
Mindset is key. So let me ask you this. So also, there's a lot of this happens in sports a lot where, hey, you're participating in a sport, maybe at a higher level sport, and you really have to buy into the program. Coaches like to say, buy into the program. Is that a familiar concept for you?
Yeah, 100%. I've come across that a lot with working with sports teams, actually. But it is true in trading. The equivalent would be buying into the process, which is a lot easier said than done. I think a lot of people struggle with the idea that actually believing that focusing on the execution of your trading plan can be profitable. They have the natural inclination to always focus on the P&L and to try and trade themselves out of the red, and they believe that actually that's the way to be profitable, whereas the truth is just focusing on the execution of your plan is the surefire way, as long as your plan is good, is the surefire way to be profitable. But people just they have trouble trusting that. So sometimes I work with people purely on building up the trust that if you do it this way, you're going to actually meet your goals, whereas if you keep doing it the other way, you won't.
Awesome. Well, that's great stuff. We're getting up against time here, but I do want to show folks how to reach out and find you. I have your website up here right now. And I know you have like a free something or other somewhere on there, free course or free video. Is that right?
just up the top there, the free trading psychology masterclass. Yeah. So
There
that
you go.
gives people a flavor of like some of the most common trading psychology challenges and how to address them. So and it's totally free. It's about an hour of training. So you can sign up to that on demand as you like.
Yep. And then the website URL is credaperformance.com. If you don't speak Irish, it's still Crede.
Yeah. It's the easiest I could make my website. I didn't think CredeSheehy-Kelly.com was going to work so well.
Yeah. So anyway, that's the website. There's a registration page. I encourage everybody to give it a try. It's really good stuff. Let me ask you though, we got a couple more seconds left. You draw a lot, you draw a lot of parallels between a high level sports and high level trading. Is there any areas there where they diverge?
Oh, that's a great question.
Save
Only
that
I would say
save
that
that for
there's
the next
not the
show.
team. Yeah, I think that would be a really good discussion for the next one. But I would say just the team element. So, there's more of an emphasis on group dynamics as well for sport, for a lot of sports, whereas with trading, it really is all on your shoulders. So
Yeah.
for me, there's even more of a necessity to really dial in your mental edge in trading.
All right. Sounds good. That just popped in my head right there. I don't know. And Mission Control, did we get a chance to show the website? I don't know if okay, cool. Thank you for that. All right. Great. I look forward to the next time. I know you're on the calendar again. Look forward to talking to you. I always learn a lot talking to you. Appreciate taking time out of your busy schedule.
You too, Jim. Thanks so much. Talk to you later.
All of the symbols, trading ideas, and live trading are for demonstrational purposes and are not recommendations or trading advice. Past performance may not be indicative of future results. All of the information and opinions expressed by third-party guests are their own and are not necessarily those of NinjaTrader LLC. Trading futures involve substantial risk and may not be suitable for everyone, and trading futures can result in losses greater than the initial required margin. Traders should only trade futures with risk capital. Risk capital is money that you can afford to lose without jeopardizing your financial security or current lifestyle. You can find additional disclosure information on the NinjaTrader website.